It's been a wild week for SoFi because they reported earnings on Monday, and every analyst under the sun has been coming out with their own unique thoughts about the strengths or lack thereof of the numbers that SoFi reported. And in this video, we're going to be chatting about all of the analyst upgrades, downgrades, price changes, and all the other pieces of news around SoFi that I saw this week. Let's jump right into it. Okay, so on Monday morning before the market opened, SoFi reported their Q4 earnings report and beat on both the top line and the bottom line and reported their first ever profitable quarter as a public company with 0.02 cents EPS. On this channel, I covered the earnings results live, and on Tuesday morning, I released a full 34-minute breakdown going segment by segment on the numbers, touching on analyst Q&A during the actual earnings call, and also talking about some of the guidance that they gave for 2024 and also the 2026 guidance. If you've not seen that video yet, I highly recommend it because it breaks down the earnings results in a very granular way. So I won't go in depth on the earnings report since I covered it and that's a specific video on its own. I will say, however, around my overall sentiment on the Q4 results was that it was a 10 out of 10 earnings result. And the factor that made it 10 out of 10 was strictly Anthony Noto's comments around 2026 growth targets. And it's very clear once you reread the transcript or once you listen to that call again that this company has a very long-term vision of their growth rate, how they're going to scale, and what that translates to from a product perspective, from a revenue perspective, EBITDA perspective. And immediately following the results, a little bit later that day, SoFi did release a press release around a new offering that they are now providing to users, whereby SoFi Invest members will now be able to invest in alternative investment funds, mutual funds, and money market funds. This launch of alternative investments will initially consist of over 6,000 different mutual funds to members of the SoFi Invest platform, as well as the ARK Venture Fund, and also other funds that include real estate, private equity, pre-IPO companies, a wide diverse mix of different opportunities that they're now providing to SoFi Invest members. In the press release, SoFi CEO Anthony Noto said, quote, "Introducing access to alternative investments continues our focus of offering access to investments that are usually reserved for the ultra wealthy and allows us to provide our members with even more choice and flexibility when it comes to investing their hard-earned money." So obviously this is very positive as it's an expansion of variety for SoFi Invest members. Over the past week, for example, we talked about the ARK Venture Fund and how that consists of pre-IPO companies as well. Particularly, we talked about SpaceX and also Twitter to give investors exposure to that. You can now do that if you're a SoFi Invest member. Last week, it was in the beta version, and I think on Tuesday or Wednesday, members were seeing it live in their SoFi Invest app. This is a competitive advantage that SoFi Invest does offer from a product perspective that many other brokerages might not offer, which is obviously very positive. However, I think the main topic of today's video and an encapsulation of this week has been around the analyst price target changes. We start on Monday, just a few hours after the earnings results, with our very favorite bear, Wedbush's David Cavarini, who reiterated his $3 price target. And in this note, the sell rating that he gave was due to a combination of factors around SoFi's growth prospects and credit quality concerns. The analyst here calls the company's 2026 growth targets more aspirational than achievable, expressing skepticism about the company's ability to ramp up growth over the next few years to meet their targets. After reading this, I couldn't help but feel a sense of hopelessness, but I also laughed. And the reason why is because when SoFi was an unprofitable company, every analyst held this against them. It was a weight over their neck, essentially. And now that the company is officially profitable, you would expect that weight to be removed. But in fact, most analysts have come out and said, yeah, you are profitable, but we don't expect it to last, or we think your growth rates are not good enough, or we don't think you're going to execute, or whatever other reason that they have in the book to throw at this company. And overall, there's such a constant disbelief in SoFi's proven execution. And that's not even the most hysterical part to me. I think if you needed an indication of how out of touch some of these analysts are, they expected this company to do 5 to 6 cents EPS in 2020. And the initial guidance that SoFi released was for 8 cents EPS, essentially beating these numbers from a bottom line perspective. Margins came in at 30% for EBITDA, a number that Anthony Noto said on the earnings call they could sustain and even improve as time goes on. And yet, even after the company consistently executes, analysts are still coming out and they're doubting the numbers, they're doubting the execution, they're calling the goals lofty and aspirational as opposed to achievable. And that just, to me, doesn't sit right. And just to sprinkle a little bit of good news into the mix, on Monday, Truist came out reiterating their $14 price target in a note that was titled, "Doubters will doubt, SoFi just executes, buy." And I think this title perfectly encapsulates my previous sentiment around bearish analysts and also the Jefferies note with regards to SoFi's execution in general. On Tuesday, Kyle released an updated list of all analyst price targets with Jefferies and Truist at the highest, and the rest of the analysts descending down, mostly banks. Wedbush is the lowest at $3. And overall, we received notes, upgrades, downgrades from most analysts to justify whatever price target they had. But by and large, I think a lot of these analysts missed the mark in terms of what their new price targets are, because a lot of them are just vastly discounting SoFi's ability to execute above and beyond what the expectation is on the street. Later that night on Tuesday, Cathie Wood began buying shares of SoFi, first buying 290,000 shares on Tuesday, and the next day buying 344,000 shares on Wednesday. This was as the stock price was declining, and we're going to talk about the stock price in just a second. More interestingly, though, on Wednesday, I saw news around SoFi appointing Dana Green to their board of directors effective January 25th, 2024. Green served as a senior bank supervisor at the Federal Reserve Bank of New York for 32 years. During this time, Ms. Green was in charge of supervising financial institutions with complex risk profiles. Immediately off the bat, with regards to this news around Dana Green, there's some positives and some negatives. The good here is that this is a professional who is coming from a banking background with connections to banking legislators, with connections to the Federal Reserve, and that's a massively beneficial asset to have from a networking perspective. That can open doors for SoFi, maybe from a regulatory angle. You know, the flip side of this is obviously that this individual is going to receive stock-based compensation. We know that this number has been decreasing for SoFi, but there will be a level of dilution as a result of stock-based compensation, as when the restricted stock units start to vest, they're essentially added to the outstanding number of shares of the company. So each quarter, outstanding shares are increased by some amount. Directors of the company are typically awarded RSUs when they're first appointed, and then receive RSUs on a yearly basis after that. And so if this is somebody new that's joining their board of directors, they're probably going to get stock, and that stock is, probably going to dilute some shareholders, but it should be a pretty trivial amount. And I think the benefits that you're getting with someone like Dana Green being in that seat is going to be beneficial for SoFi's growth moving forward. Wednesday was also an interesting day. There was a lot of news that happened on Wednesday. First of all, Morgan Stanley cut SoFi to $6.50 price target from $7, citing factors such as regulatory headwinds and execution risks on the company reaching new profitability targets. They said basically that top line is slowing, execution risk, on the path to 2026 EPS. And again, I made a tweet about this saying, a month ago, analysts were saying SoFi is still unprofitable. And today, analysts are saying there's execution risk ahead. So, just pick a lane, right? Because we know this is a company that's consistently beaten all estimates for the past 2 years without a single hiccup, right? And yet, analysts are still coming out and saying, oh yeah, we're downgrading you guys because there's execution risks. Or as Wedbush said, your goals are very aspirational. This is just BS in my mind. Analysts, if they're bearish, they'll always tie on to something, whether it's regulatory concerns, whether it's credit risk or credit profiles deteriorating, or whether it's just the lending segment as a whole that's not going to be as strong. Anybody can find a reason to build an entire case, whether bullish or bearish on whatever company. That doesn't tell the full story, however, right? And I think that's the message that I'm trying to get across. The reason why I say Wednesday was a big day was because obviously we had the FOMC meeting on Wednesday, where the Fed Chair Powell kept rates unchanged, saying basically that a March rate cut was unlikely. This was on the same day also when New York Community Bank shares fell over 40% as the bank posted a surprise loss on the fourth quarter, cutting its dividend, raising credit loss provisions by 10x, I think, something ridiculous. Trading, I believe, was halted after the stock just collapsed. Not really related to SoFi, just tangential in the macro. Some other minor news. Thursday, Cramer mentioned SoFi, basically reiterating that he was bullish on the stock and saying how crazy it was for these analysts that were hating on the stock, which I definitely agree with.
SoFi became gap look, this is crazy. All right, look, SoFi delivered a quarter. It was a terrific quarter. I don't know why these analysts hate it so much. They took it and they went, they just like, boom! I mean, it was unbelievable what they did to it. And I can't believe it. I think it was an insult to the people who own SoFi. Also including Anthony Noto, who's the CEO. Stock should be down here.
I saw a post from Josh around level 1 options where the SoFi team said that there could be updates in the next couple of weeks. Keep an eye out for that. And finally, we received non-farm payrolls on Friday, which came in stronger than expected, right? Now, I want to just skip forward and spend a moment talking about the stock price action over the past week. Normally, I talk about this at the beginning of the video, but I wanted to spend a little bit longer in this segment talking about it. Last Friday, before the earnings results, SoFi closed at about $7.65, around that range. They opened on Monday after spectacular earnings at about $8.70, around that range, climbing up above $9 intraday. And throughout the week, as a result of these analyst downgrades, the FOMC meeting, and other factors, SoFi gave up all of its gains, closing off the week earlier today at $7.88, which is essentially very flat from a week-over-week perspective. If somebody zoomed out and just saw the numbers on a weekly basis, they would have never guessed that this was the first quarter that this company hit profitability, because the variance is like less than 20 cents from what it closed last Friday to this Friday. So the question is really, where do we go from here? Well, on one hand, you have this reinforced behavior of an entire cohort of investors who have just seen the stock bounce around between the $7 and the $10 range, unable to really hold their gains and just giving them all up immediately after. You've seen manipulation, you've seen these stupid analysis from people who just latch on to one aspect and form an entire bear case around that. And the through line of this all is you've seen this company consistently executing, consistently beating out all their targets, consistently raising their guidance, and having a path forward to their growth through 2026. And so I guess while many short-term analysts can hate on SoFi, can bash it for being a broken stock, long-term investors have further opportunities to buy this stock, because today they have confirmation of profitability and they can buy at pretty much the exact same price that they could have bought last week or 2 weeks ago or a month ago when the company was yet unprofitable. And that is a rare occurrence, but it's also an opportunity. And yeah, that might sound a little bit hopeful, but there will come a time, maybe 6 months, maybe 12 months, probably sooner than that, when the market will recognize the strength of this underlying company, which continues to consistently execute, and the stock price is going to reflect that. And what I'm doing personally at these prices with profitability confirmed, I'm buying. And I'm even considering folding some of my other positions into SoFi just to consolidate even further into SoFi. I think if we fall even further below 7, I'm going to be going super heavy and actually making SoFi the majority of my position, because I think, frankly, the risk to reward profile for SoFi is much more appealing than the risk to reward profile for a lot of the other names I'm currently in. So we'll see what ends up happening. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.